Welcome back to The Compass. Recording this episode on Monday, March 24th. With you as usual, my name is Derek Macpherson. I'm the executive chairman of Olive Resource Capital, and joining me as always is Sam Pelaez, the CEO and CIO of Olive. We have been a little bit delinquent in recording at Compass, and so we felt it was the time to get back at it. Obviously, market's in pretty good shape from there. So I guess for this episode, the kind of what we want to focus on is sort of where the market is, where we think we are in the cycle, and what the opportunities are that we see with it. We're hoping to be doing at these more regularly, so we can get into some other more niche themes that have come up as we go on in the next episode. So, Sam, where's the market? Where are we at?
Well, first of all, happy to be back. The state of the market is pretty simple. Gold is at all-time highs. Copper is at all-time highs, depending on how you measure it, but I think generally accepted that it's near or at all-time highs. Silver is perking up, but outside of that, that's pretty much where it ends for commodities in terms of bull market. What does that tell us about the global macro? I'm not entirely sure, to be honest. Lots of instability, lots of political games going on. The Russia situation still to be resolved. But I think for the purposes of this episode, we want to focus on those three markets and where we think the biggest opportunity for reward and return currently lies. And not to prop ourselves in the back, but I think it was our first or second episode. We devoted the entire time to just talking about M&A. And there's been lots of M&A over the past 12 months. But I think I can just go out on this one and say, I don't think we're anywhere near done with the M&A trend.
Yeah, well, I think M&A is one of those funny things, right? There's lots of M&A going on around you, but you don't really think there's a lot of M&A going on until something in your portfolio gets taken out.
Right.
So, it's interesting, going down that theme. In the last few months, there's been a lot of transactions. Some smaller. Obviously probably the big one is the Calibre-Equinox. Probably one that a lot of some viewers may not be as familiar with, especially those that are North American based, is into Australia. You've got Goldfields made an offer for Gold Road, which actually Gold Road just rejected. You have Spartan being taken out by Ramelius. You have or an offer there, and then you have Northern Star taking out De Grey. And so I often think sometimes the Aussie market leads in the cycle. I guess we're seeing a developer being taken out on the M&A side, and the interesting part is this really follows what happened with the selling of assets by Newmont. Right, we had all the producing assets that Newmont was selling have now all sold or have deals on them to sell, and so. If you were a single asset or a mid-tier producer that had a mandate to go buy something, and you didn't get your hands on one of these Newmont assets, and a lot of them didn't go to what people we would have considered to be traditional buyers, I think you have to go downtrend and go look at developers.
I think the Australian experience over the last 3 months is pretty important for two reasons. One is, obviously, we've moved from the producer to smaller producer acquisitions to producer to developer acquisitions. But more importantly, Gold Road is a producer. But in the case of Spartan and De Grey, the targets for both Ramelius and Northern Star, we're talking about multi-billion-dollar deals. These are not 100 million to 500 million, which is typically the bracket that we are more used to. These are pretty sizable transactions. And I think that's important to note because obviously it starts to reset the expectation of how much is a developer worth or how much could a developer be worth, since the great days of Great Bear a couple of years back, when 2 billion takeover in Canada. We haven't seen that level of aggressiveness to buy developers at that type of valuation. So here's to hoping that that changes.
Yeah, and I guess maybe just to put a bow on that M&A theme, there's still, we were talking about this earlier, but there's still half a dozen names that really ought to buy something based on their cash position and how they're doing, and then think back with their single assets, and haven't been. You think of Lundin Gold, maybe Dundee, although Dundee has growth internally. IM Gold, Barrick, Torex, one of your favorites, Centerra.
We'll see how it plays out. But yeah, no, there's certainly a large number of corporates out there that have not been aggressive enough, that have the balance sheet to do so, either have the paper, the stock price multiple to be acquisitive, or have the cash balance to do so with cash, or in some cases both, which is obviously the best place to be. We think, or I think, I can't speak on your behalf, but I think that we're going to see some of these ones come to the market. Impossible to tell who exactly, but with gold are all-time highs. The producers, especially on the upper end, have started to outperform the commodity, which is something that we did not see last year, or not till the end of the year. We're starting to see it pretty aggressively this year. I think that makes the coming down market for an acquisition much, much more attractive for a producer, and especially for the board, which is ultimately the blocking element. It's just obviously the people are concerned with that, with a share issuance at a certain price. So I think this assists in that decision making for those especially larger, lumpier acquisitions.
I think there's probably a whole episode on why M&A doesn't happen. I think we could do it at a later date, but I think you hit on a key point there, right? When your share price is going up as a buyer, and the seller share price is starting to go up, that's the easiest time to actually get a deal done, because the seller doesn't feel undervalued. The buyer feels like that their paper is a little more properly valued. And so it becomes it makes a transaction easier. It's why, acquisitions don't happen at the bottom, right? Everyone thinks they're cheap and they don't either want to issue paper or sell out at that price, even though the reality of it is it's a relative game. But I think I want to take, so the M&A, we're just starting to see that M&A cycle pick up. We're getting out of the producing assets. Maybe we're starting to see some developers, which I think is a good thing. But you touched on this a little bit with the move in the producers, right? We're at all-time high gold. But if you think about that, how are we doing relative to the stocks? Yeah, I mean, Agnico Eagle is at all-time high gold, and you have an all-time high in their share price, which is the way that it should work. The other senior leaders or senior producers in the gold space maybe not doing as well, but I think that we're starting to see that those producers who are putting cash to the bottom line at this record high gold price are being rewarded for that finally, and I think that's an important thing. But that's the very beginning of a bull market, not mid-cycle or late.
Yeah, no, and this is where the new mid-tier producers are created. So say Lundin Gold or Torex, single asset producers, big underlying operation, perhaps some lesser known jurisdiction or lesser loved jurisdictions. This is an opportunity to diversify out of those jurisdictions, and effectively the opportunity to become a 2 or 3 asset company. Much like, if you go back in the days, Dundee Precious started like that, and now they're, further ahead. There's, B2Gold was once something that looked like that. This is the stage in which you create those new mid-tier companies. And frankly, I think the market has been good to Lundin Gold and Torex, just to name a few, because obviously there's more. K92 is also moving well to the single asset producers, and is giving them now the perfect window and opportunity to try to replicate their success in a different jurisdiction. It's hard to find ore bodies like those three companies have. They're exceptional, but maybe at this point you don't have to duplicate it. You just have to get the next best thing that's available. And with the market cap that they have and the paper that they have, the window has now opened for them to be acquisitive. That's a window that Torex didn't have for the past 10 years, effectively. It has it now. London Gold, exceptional performance of the stock, and I have to say, from the company itself and the people working there, it's incredible. But they now have the paper to do some incredible deals, and why not take the opportunity to do so?
In London Gold's case, they probably have the cash too, but it's also they have the cash to go build something. But I think what you're going to see as the cycle progresses is that the market's going to reward growth. That's usually a kind of a later stage of that initial bull market, is that companies that have growth or have production profile increases get rewarded. It's not just margins and how many dollars you're putting in the bottom line. And so I think that's where some of these companies, you mentioned K92. Well, K92's growth is actually built in and funded. It's unique among those large or those growing single asset producers. Whereas, London Gold has some exploration upside on the property, but doesn't really have growth. In the case of Torex, again, they just finished their big CapEx project, so the production profile is sort of set. So that future growth, to get that future growth, a lot of them are going to have to go outside their current current portfolios. So I think that's where M&A comes in. But I think the interesting part from an investor point of view, right? So you've got these companies that maybe need to buy something, but if you look at the way gold companies have moved, you've got Agnico Eagle is at its 52 or all-time high gold prices, and we're seeing the producers kind of get lifted with the gold price finally, or rewarded for delivering at this gold price. But then all of a sudden, if you go to that next level down, you go out of the producers and the developers, kind of performance has been select, if you will, is probably a better way to describe it. Some companies have moved, some haven't. Be a reflection of how our portfolio is. As an example, we've only seen a small move in Troilus, which is a company that we like in the developer space, and we've seen a much bigger move in OMAI recently, right? And so you're still, but a lot of those ounces in the ground that these developers have aren't expensive. That's a key. I think that's a key point. And so there is room for M&A, but what changes, and I guess that's the thing. And then if you go down to explorers, it's even fewer names have actually moved. But importantly, explorers who have had success are actually moving. Right? If you've got good drill results coming out, it don't have to be great. A year ago it had to be an exceptional drill result. Just has to be good now. If you have good drill results coming out, the market appears to be rewarding you and paying attention. So that's positive.
Yeah, well, we're seeing the trickling down of the capital, and if you look at the sequence of M&A, obviously this is not perfectly linear, but the Newmont assets were very sought after because a bunch of them are in production, and all-time high gold price. What you want is immediate production. Where can you get production quickly, or as quickly as possible? Obviously, the Newmont assets were interesting, and I'm pretty sure that the list of potential buyers that bid or looked at these assets in detail it's nearly infinite. But those are out of the way now. Calibre, before this Equinox deal, they took the Valentine Lake project at Marathon. That was 70% through construction. So again, you're close to ounces or close to production, and I think that's the sequence that we're going to continue seeing. But other than Skeena, there's not like a handful of projects that are in construction right now. So you're going to have to go, and Troilus working on a financing package right now. FS already done. And it was a positive FS even at, sub $2,000 gold and probably $350 copper. Both of those are 50% higher now, right? Or more. So I think that's where we think the opportunity is sitting right now. Where can you get an asset that's permitted or has a quick path to permitting that you can start building in this cycle and fund in this cycle? And I think that's what if you read our disclosure, what we're saying is we are focusing on fewer names, but higher conviction ones. And I think that's where we get, part of the conviction is that segment or bracket of the market, where we've identified a few opportunities, Troilus, OMAI, Arizona, Sonoran on the copper side, that we think have that very realistic chance of being built in the next couple of years.
And I think maybe another point here that kind of fits into that theme a little bit is because a lot of the M&A has been basically asset sales, not corporate takeouts. Or even in the case of the Calibre-Equinox deal, it's an at-market deal. It hasn't drawn money in because there isn't greed. There's not that I'm going to miss the next deal, so I have to own these developers and explorers. We just haven't seen enough of the corporate level transactions to really get to drive the greed. And I've said this a few times, probably never on here, but it's greed is good in the mining space, in the sense that once people feel like they're missing out, right? It's kind of like crypto, right? People feel like they're missing out on the next meme coin, so they're jumping on it, so they get the opportunity to make money.
Yeah.
Well, people are missing out. People aren't missing out on corporate takeouts in the mining space right now. And so if you're not missing out, you're not greedy to get in there. You don't have to be positioned already. And so I think that's, as we start to see some premium corporate takeouts where there's, deal tension, I think that's what you're going to get. That's going to drive money down cap as well. It's going to chase money down cap because people, that's an instant 30% premium, at least 30 to 50% premium on a takeout. And so I think that's certainly a level where people go, where you want to be, you want to be in that name the day it gets taken out, if that makes sense.
I think we've been focused on, we've targeted a few stories, mainly North America focused, but we also like the opportunity set in Finland and in Sweden, because those are jurisdictions where permitting frameworks are somewhat straightforward or more straightforward than other jurisdictions. Productivity of labor is high. There's deposits there that could be delivered on this cycle. So we also have exposure to those two markets. But I think the point I'm trying to make is there are a few opportunities that fit this criteria that we're talking about, but there are also not way too many. The pickings are not that numerous that every buyer is going to end up with what they want. Like the game of musical chairs is starting to work back in our favor for us who are invested in this bracket of the market, where there's fewer quality projects left rather than quality producers that would like to be active on the M&A space. And I think ultimately that works well for fostering competition for the assets and reversing, to your point, the fear of missing out. We're starting to move into that phase, I think.
Well, I think you touched on something from a jurisdictional point of view, and this is, again, probably its own episode, but resource nationalism is a real thing, East versus West. And so the location of ounces or pounds or whatever it is that you're mining, it matters a lot. And you're seeing both Canada and the U.S. have both announced, Trump signed an executive order on Friday to make the U.S. easier to permit. As part of the campaign, the liberal side in Canada announced that the federal government's going to get out of permitting, which is a big thing for Canadian projects. So I think that there's a whole theme. There's a whole theme in that. But I think you got to where those ounces are located when you have a push to have, where those assets are located when you have a push to have sort of local source or Western sourced assets, I think matters a lot. And so I think that's in and of itself, it kind of feeds our approach in those areas.
I think it's going to come as an avalanche, but let's wait and see.
Let's hope so. But I think it's going to. I think a key part of it is it's going to drive. It's not just going to be that these few developers that are left get taken out. It's going to be a push of capital down cap. So when you have a cycle turn, and this is when the cycle turns, it's easier to get in and out of producers, right? We were having this conversation about in another area where the commodity is out of favor in PGMs, right? You don't need to own the producers right away when the commodity turns, because the producers you can position yourself as you go. Where you need to own them ahead of the money flowing in is the developers and the explorers, because those are the ones that you wake up one day and the stock's doubled. And you've sort of, and then you feel like you missed it. You don't get in, and it doubles again maybe after that before it gets taken out. But feel like you missed the easy money. And so I think that's a key thing is that now's the time to be positioning yourself in those developers and explorers that you like. I mean, some of them have moved, and probably but there's good ones still that haven't. And so I think that's a key element. So, just looking at the time, let's talk. We pretty much talked around the three names we say we're going to talk about here, but three names that we like that fit this kind of where we are in the market and where we think things are going, because they're both good projects, but also have that fit the portfolio of a lot of other companies. So I guess first is Troilus. Sam, you want to go ahead on Troilus?
Well, it's over 13 million ounces in Quebec, in one of the best jurisdictions in the world. Has copper credits, disturbed site, well-known jurisdiction for a lot of miners, and they're not sitting still waiting for a bid. They're actively setting, they've set the mandate for a project funding capital base with multilateral institutions. That's what you do when you build it yourself. And there's one more thing I want to say about Troilus, which is the feasibility study it's an excellent study. It's just a high capex project because of the tonnage, but that was done at, I think my memory may betray me, but $1,900 gold and $350 copper, or even $325 copper. So both those prices are 50% higher now. I'm pretty damn sure the capex is not increased by 50% over this last 12 months. So I think that's a project whose economics have increased dramatically, and we have not seen that reflected in the share price. And I can think of 3 or 4 producers who could really benefit from an asset like this. And I've said it before in previous episodes, but it just feels a lot like Detour Gold back in the day. Somebody with a real balance sheet, like ultimately Agnico was able to do with Detour, will turn this into not 13 million ounces, it'll be 20 or 25. And it'll be producing north of 500,000. Hopefully hopefully can grow to something like Detour in the nearing 1 million ounces a year. So it's an asset that I think is spectacular for that sort of like multi-generational company. So anyway, that's why we like it.
Yeah, I think the other key thing there is permitting. They're obviously progressing down the permitting path to get this into production. So there's probably 2 key moments where are kind of gates from an M&A perspective that you look at for something like Troilus. I think when the permits are in hand, oftentimes people don't want to change you don't want to change proponent once you're a long way down the road. The second is project financing. I remember Clive from B2 was talking about when they bought Sabina and why. Typically a phase they didn't want to buy they wouldn't buy the company at. But the reason they bought it then is because they didn't want the financing package. They didn't want to see Sabina draw on the financing package because it would have impaired the asset permanently. And so they there was a window where they had to buy it at that moment. And so I think those are 2 things that, the risk of drawing on the financing package, I think probably accelerates any M&A discussion and the permits. So, maybe that's a later this year opportunity with Troilus.
I was going to ask you if you want to talk about Arizona Sonoran.
Yeah.
It's our copper darling.
Yeah. Arizona Sonoran is a copper darling. I think we did a pretty good episode talking about the change. You can go back and look at that, but talking about the significance of the PEA, the updated PEA had on that project and what it meant from a a scale perspective for that company. I think, and that company's continued to progress. It's very good. It's very good. It's a U.S. again. It's a U.S. project. It's a disturbed site. They effectively have all the permits or majority permits in hand to go operate, and state level permitting, which is easier and it's still easier in the States. So those are all positive things. I think the other key thing here, and I think there is now M&A tension, right? We always knew that Rio was involved. Obviously, there was they have the option to back into the project if the Newton technology works. Right now, if you even look at sort of small numbers, the buy-in on Newton is still worth more than the company, based on the formulas that are attached there. So I expect that if that was the case, Rio would buy the company before they would back into the project. However, Arizona Sonoran added a new investor just recently, which was Hudbay, and Hudbay bought 9.9, and Hudbay is very active in Arizona. They've got Copperwold Phase 1, which is permitted. They're working on permitting Phase 2. They have Rosemont, which has an outside chance of getting permitted now with the recent changes and the recent approach. And so, they seem to be all in Arizona. And so, now all of a sudden you have deal tension, and perhaps instead of waiting for the Newton PFS to be released, which would be the gate for Rio, now it's when the base level project PFS gets released that things get really interesting. And so I think that definitely bodes well from a timing perspective for Arizona Sonoran. And I guess the third name is one that is our biggest mining position, and one that I'm partially conflicted on, which is OMAI, which has had is a developer that has had really strong performance, but driven by drill results. Continue to like the name, but maybe Sam, you might want to add your thoughts here.
Well, we on a relative value compared to other assets in the jurisdiction, it offers the greatest value. But more than just that, the number of catalysts coming out with tons of new drill results under the pit, proving the extent, or proving that obviously the resource growth is there down the road for whoever is going to build it or mine it. I think that's been exceptional this year. There's going to be a resource update at some point, which obviously will hopefully, I think, and maybe you can correct me, include the underground. But even if it doesn't, like the Equinox pit is going to be it's going to see resource growth based on the drilling that we've seen so far, and also the infill holes that were required to bring some of those blocks back into the mine model as ore. I'm pretty excited for that resource update and whatever comes after. Also, talking jurisdiction and permitting, this is a jurisdiction that's coming off, permitting and building one of the largest offshore oil projects in the world, and I think they've got a pretty good handle now in terms of what it takes to deal with foreign entities and resource companies and how they think. And as I've heard it before, like this team, based on the government's view, this team can't get the mine built fast enough. There's also just out of the general wealth that's being built in the country, like there's new roads, or not new roads, but like the improvement of roads and overall infrastructure that will ultimately benefit OMAI, but just generally all of the companies operating in the country. So we think that's it's an exceptional company in and of its own, but also it's in the right place at the right time when it comes to jurisdiction and geography.
Yeah, I think that's on the resource update. I don't think there'll be a change to the Wenot, but to the Wenot underground resource, but that'll be something that'll be incorporated in the PEA later in the year. And I think that's a key piece as well, because you start to talk about how big this thing could be. And if you're a mid-tier or a major who's buying this, you're building both the underground and the open pit at the same time, right? Whereas if you're a junior who's putting it in a PEA, you might structure that differently, or you're single, your developer built going its own. Yeah, and I think that's a key point. The key point here, on the country developing rapidly. But I think the other thing is relative valuation continues. compared to where Reunion got taken out, continues to trade at a material discount to that. And so I think that there's certainly a lot of opportunity, or relative to G2, which has an exceptional market cap and value. And so I think that we continue to believe that there's a lot of upside in the share price from here. That's OMAI. And so those are three names that we think kind of fit the theme of where the markets are going and where we are in the cycle. Gold money's just starting to trickle down. Copper, not at all yet. We'll start to see that as it goes. And I think we'll try and, as I said, excuse me, as I said at the outset, we're going to try and do these on a little more regular basis. So a couple of other themes that we've got queued up that we want to talk about. Mentioned them in this episode, but I think also if anyone else has anything they want us to opine on or spend 25, 30 minutes chatting about how we think it fits, let us know. Thanks.
Thank you.